running. And they're telling you, if you pay within 24 hours or if you pay today, we'll be able to increase your limit so that you get more. Now, what does that do to you as a person? How do you respond to it?
Okay.
Yes.
And that has piqued my interest, because when we were being taught about money, some of the basics about money we were told is its scarcity. Because now when it's in plenty, it now becomes useless, sort of, right?
Yeah.
Why then does it take us to a crisis when politicians hold the money? Shouldn't it now even increase in value?
A message pops up.
You qualify.
Or sometimes you have an existing loan that is running. And they're telling you, if you pay within 24 hours or if you pay today, we'll be able to increase your limit so that you get more. Now, the net income multiply by 12 months in a year. If you've been working for the past 10 years or 5 years, multiply that. Then ask yourself, are you getting money or you are not getting money? This person starts earning 50. This person was surviving with 20,000. Who was managing, right? Now that this person is earning 50, a layman would think that now you have 30,000 that is just hanging somewhere, right?
Upgrade.
But is it the case? You should beef up something that from your basic household expenditure. If you normally need, for example, 40,000 to run your errands for the house for a whole month, you need to put that one 6 times and put it in some emergency fund. Now, once you have that kept aside, that extra emergency, now build your wealth. Yes? Now, this wealth is something which is long term. And this is where the securities come in. For example, treasury bills, treasury bonds, those which take time. Now that is wealth. And now the essence of saving comes there. This other saving is saving for emergency. Yes. So it is.
Wagwan, ladies and gentlemen, welcome to another episode of the Guest List. This is Black Room Live. My name is Adera, I'll be your host. And today, Nico, excited because we are sitting down with one of the people who makes one topic that so many people want to shy away from, and I make it easier. We are sitting down with CPA Samuel. CPA Samuel is an MSc Finance, is a tax expert, is a BDA tutor, is an accountant, is a finance analyst. Karibu sana Sam.
Thank you so much.
You have ukona titles mingi sana, and all these titles we notice zina revolve around pesa. Yes. I'd want us to explain in just a simple sentence, what is it exactly that you do?
All right. So all that you've mentioned revolves around the same thing. Because as an accountant, I have to understand tax. As an accountant, I have to understand finance because it is the same thing. And again, BDA stands for Business Data Analytics. This is a final post-advanced level course that people who are training to be accountants, they have to do it before they now get to the field. It's a practical paper. So that's why as an accountant, I have to be well conversant with all that. So it's literally the same thing. Yes.
So you're basically a math book walking on 2 legs. Karibu sana men.
Thank you.
There is very little financial literacy hapo nje, and as we go on, we realize we were taught very little about money. I don't know what observation you have to make about this as an accountant.
There are a lot of, money issues that affect people. And literally, it runs across even those who understand it because of lack of discipline. So finance issues require a lot of discipline, regardless of the amount of the money in question. So literally, most of them we spend, or maybe we behave around money emotionally in most cases. Where when you involve yourself in emotional spending, you realize you spend money without thinking. And again, technology is here with us. It has done its things. And I will tell you today, as we speak, people are comfortable so long as they have the loan applications on their phone. Because it's just a click away. And to make it worse, because of competition in the financial markets, all these lenders and the banks, there is competition. So they are really trying to also use technology to lure as many people as possible by sending unsolicited SMS messages, promotional messages, where you are seated like this. I mean, maybe you are thinking about something else. a message pops up.
You qualify.
Or sometimes you have an existing loan that is running, and they're telling you, if you pay within 24 hours, or if you pay today, we'll be able to increase your limit so that you get more. Now, what does that do to you as a person? How do you respond to it? So that's where the whole thing starts. So as a people, most people, get to react to those messages. Because that's what they're looking for. They want you to react. So that is where the mess starts.
So it's safe to say money na psychology, money matters na psychology ama feelings kidogo zinaendana.
I mean, a lot. In a lot of cases. In a lot of cases. They go together. Yes.
There was a report, I think early this year, I think last year, that very, very few people, let me just see if I can pull it. The report was revolving around what wako na, it was saying very, very few people have a bank balance of 100,000 and above.
Yes.
Another one also, I think, came out early this year. Ilikuwa inasema, I think about 2% ndo wana earn about 100,000 and above in Kenya. When you hear things like this, numbers like this, what does it tell you about the state of the economy and the standards of living and stuff like that?
Okay, so from my standpoint, from how I understand money and how you need to handle it. Okay, you realize that our economy may not be doing very well in terms of what trickles down to the common mwananchi. What trickles down to people. That's why even the rate of unemployment is so high. And the employment opportunities that are there, you realize that the wage rates are so low. Because of the competition. They know that there are a lot of youth out there who need the jobs. So they don't pay you competitively. And again, the business people are struggling. Business are not doing well. So how do you expect someone running an SME, trying to revive it, struggling with a lot of challenges here and there? They want somebody to work in their premises to help them run the business, but they can't pay more because they don't get that profit. So if that profit is affected, then whatever they have that they can sort these expenses, like paying the salaries, is not much. So they have to strike a balance. That's why from that survey, they realized that the bank balances are not much. And again, when you talk about bank balances, and I want to connect it with money, we normally encourage people, you do not let your money lie idle. So even if you have, for those who have it, leaving your money to sit in the bank account is not recommended.
So this could be a false alarm. It could be a good sign.
It could be a good sign because it means people, this money
investing.
Is circulating. The money is moving in the economy, and that's what is required. It should not be sitting in the bank account because it's not adding value. The inflation is eating up to it. And it's not adding more value. Yes. So on the flip side, when you talk about the other one you talked about, is it people spending less or something?
No. It was about people earning less than 100,000.
Or less than 100. And then the other one was the bank balance. So people earning less, obviously, when the economy is not doing well, then, you don't expect even the business people who employ to pay much. And again, the national government also is struggling. As we speak now, lecturers are on strike. Doctors are threatening here, left, right, and center. There is also this unresolved issue with the junior secondary being part of the primary or being moved. The struggle is about finances. Because the government is trying to balance. How are we settling our debts? How are we trying to balance so that we pay? Because the wage bill in the government is also so high. So they are trying, these people are pushing for the CBAs, the agreement, so that you pay us more. We know teachers are doing a lot. But the government also tries to balance. If we increase the salaries for teachers because of the CBA that was somehow agreed at some point. Now, what of the other public servants? They will also be on the road, trying to also push for an increment. And this one will not be sustainable.
So you sort one, another one is broken.
So the best thing, that's why somehow they appear to be adamant. They don't want to, actively come out and respond by giving a commitment. That's why lecturers have been on the streets for more than a month now. And the government is trying to find a way to resolve it instead of coming out and saying it's okay, we are going to honor it. So the economy is really not doing very well. It might be doing well in various areas. For example, we are told that, when you do economics, you don't just say that the economy is not doing well if you really don't have the data. Data is very important. Because the government might be doing investment projects and capital projects. And these capital projects, their returns take time to be realized. So the trickle-down effect will need some time.
Is that why when the president takes the podium, he has some very weird numbers of how the economy is doing very well?
Exactly. A common person may not understand. But they might be also investing in capital-intensive projects. And these projects will take some time so that they start giving back to the economy. So you cannot just say blankly that the economy is not doing well. No.
Okay. Okay, that is an interesting perspective. So it is safe to say we are in a financial crisis.
Yes, cash flow. For now, at the moment, cash flow is not very good within the economy. A lot of money is not circulating. And obvious reasons, again, cash flow is affected by various factors. Like, politics affects a lot of our activities in the country.
Absolutely.
And you know that it's very sad that our politics is usually fueled by, how much you can give. So you realize even those politicians who maybe have interest in investing in various areas, they might be holding some money so that they prepare and as they gear up to
the
electioneering period. Because, Kenyans, we've made it a point where and a politician is being judged by maybe what you can give in the short term. So they want to bring back the money and try to improve the lives of people when they're almost the campaign period so that people don't forget. So that might also be a factor.
Okay.
Yes.
And that has piqued my interest, because when we were being taught about money, some of the basics about money we were told is its scarcity. Because now when it's in plenty, it now becomes useless, sort of, right? Why then does it take us to a crisis when politicians hold the money? Shouldn't it now even increase in value?
Okay, so money should be in circulation, because remember, there is inflation. Inflation where, there are less goods. There are more goods in the market, or maybe there are less goods in the market, and it does not balance well with the money. So where you have a lot of money, if maybe that money they release it and it's now circulating and it becomes in excess, you realize that now if you have a lot of money and the goods are few in the market, so a lot of money is chasing very few goods in the market. You realize that. So there has to be a balance. There has to be a balance. And that one, the economists, the economic advisors of the government, that is the work they do. They try to monitor how much money is in circulation as of today. And how much is optimal. So that they make sure it is not too much. And again, it is not too little. Yes. So that balance has to be there so that inflation is kept not too low, not too high, at optimum level.
So basic economics, right?
That's basic.
Okay. So we live in interesting times, and because we started by mentioning something about salary, I'd want your take on this, because the reason why I'm saying we live in interesting times, because people have discovered various ways of earning money apart from the traditional salary way. And the word on the street right now, and you'll hear so many jokes about it. You'd see a nice car and someone tells you, hii na salary huwezi nunua. So let me throw it to you. Can salary really make someone wealthy at this age?
I will have a two-sided perspective on that. Okay, yes, it's a common say. People think that salary really cannot do you much. But from my perspective, I think salary is the starting point. If you are lucky that you are in self-employment and you are able to get some income, that's okay. But even those who are earning salaries, we should start from a basic point. Do you know where that your money goes? How to ask yourself whether you are having money or not is to check on your pay slip. How much are you taking home every month if you are salaried? Now, the challenge you should take to yourself is take a simple calculator, multiply whatever you take home, the net income, multiply by 12 months in a year. If you've been working for the past 10 years or 5 years, multiply that. Then ask yourself, are you getting money or you are not getting money?
Okay.
Now, this salary is money coming to you.
Yes.
The most undoing, the one thing that people normally don't take time to check is where that money goes. people earn salaries.
Yeah.
And when you talk about salaries, there are people who are even earning more money.
Yes.
Maybe someone takes home 100,000.
Yes.
This person goes broke at around before the month ends.
Yeah.
This person does not have money. It's not that this person did not have money.
Yeah.
The only problem is this person does not know where the money
goes.
Now,
Okay.
the problem is not that this car you can't buy it using a salary.
Yeah.
No. It is about,
Yeah.
are you able to track down where your money goes? And if you want to know people have money, even yourself, if you want to test that you have money, check on your M-Pesa statements.
Yeah.
How many people do you think check on their M-Pesa statements at the end of the month?
I see people doing that at the end of the year, and we keep wondering, where did I get all this money and where did it go?
Check on the monies that come into your M-Pesa account and the ones that leave. Then try to ask yourself, you mean I received all this money?
Yeah, we do. We ask ourselves that. I think M-Pesa sends you statements at the end of the year.
They do. They do. And you'll realize, even if you do it monthly, leave alone, I want to put aside employment. Because even with employment, at some point, you might be having some side hustles here and there. Or sometimes you can be having a gig and money comes in. This is money. Yes, it's not from your salary from your employer, but it's money. Now, the question is, do you take time to plan on how to spend the money? That is the problem. People do not budget. People do not track down their
expenses.
And the problem is what I started with. It is more of emotional spending that people engage in.
Does that then draw the difference between a common person and an accountant? Ama nyinyi pia hii mambo pia inawashika?
Okay, let me tell you, truth be told, this thing covers across. I want to give you an example. You walk to a hospital today. You get a nutritionist in the hospital. You are sick, maybe diagnosed of whatever disease. Then you get a nutritionist, that person who tells you what you should eat, the kind of weight you should maintain, what you should not eat, and the pattern and whatever, the best practice. And on the flip side, you realize the same doctor
so best
who is advising you on that himself or herself is struggling with the same. So what I'm trying to connect with that is this thing does not care whether you know or you don't know. It's about, are you disciplined enough? Knowing is power, but now the discipline is what is required. You might know, but do you have the discipline to follow it through? You are a doctor, you explain very well how alcohol tears down someone's liver. And you can explain very well. Now, the same doctor, you walk into your favorite, you go somewhere to have your favorite beverage, you find the same doctor, and you meet there, in fact, and you can even buy you and you can even buy him more, right? You both enjoy the session. It's not that he doesn't know. He doesn't just have the discipline to follow through what he knows. Now, when I come to accountants ourselves, we also learn through practice. The good thing is we have the knowledge. So all that is remaining for us is just discipline. Out here, some people might have the discipline, but they don't know how. Especially when you talk about the people who run small businesses, and also just people who are on salaries and struggling here and there. So discipline is a case where you avoid emotional spending. Number one thing that we normally advise is that whatever salary you earn, it's not about the amount. It's about, are you able to plan with it? And I can give you a relatable example. For example, you know of someone who was employed. This person maybe started earning 20,000. Living in a certain rent of a house, maybe a certain lifestyle. Then this person gets a promotion or gets another better job where the salary is even double. This person starts earning 50. This person was surviving with 20,000. Who was managing, right? Now that this person is earning 50, a layman would think that now you have 30,000 that is just hanging somewhere, right?
Upgrade.
But is it the case? No. This person does not have the money. The same way you used to spend the 20,000 until you run out of money before the month ends, if you don't have the discipline and the plan with this money, even if you earn 50,000, you will still spend the whole of it and still be in the same crisis. So it's not about the amount. It's about how do you budget for it and how you track its usage. Very important. Yes.
So the whole budgeting topic is interesting, and I like it because This is where we get so many generic pieces of advices from you guys.
Exactly.
Because at one point you tell us, oh, save 30%, at another point. So I'm looking at my 10,000 shillings. I'm wondering, where is this 30% going to come from? But we'll get to that, all right? I just want to know, because you've explained so much about financial discipline.
Yeah.
So where do we really draw the line between being financially disciplined na kukua tu stingy?
Okay, so
is it just being stingy
before I talk about stingy, you know, financial discipline is not about denying yourself.
Yeah.
And when you talk about stingy, that one now comes to third party now.
Yeah.
I will come to the third party. First, let's talk about the individual, yourself.
Yeah.
Having a budget and planning for your finances is not denying yourself. This is your money. Remember, you are the one in charge of it.
Yeah.
So don't talk about denying yourself. It's about, that's why we call it discipline.
Okay.
Where you just decide to make a decision on what you want to spend where. And getting to know that last month I earned my 50,000. And this is how I spent it. And out of the 50,000, I have this one which is aside. That is discipline, not denying yourself.
Okay.
So this budgeting thing, it's a problem to a lot of people, but it's basic. It does not require you to get into a financial class so that you say you have a lot of knowledge. No. A common mananchi out there, you can start it this way.
Yeah.
Whatever income you get, make sure it is not fixed. Make sure you put aside at least 10%. People pay tithe, right?
Yeah.
Why do you think that someone might easily put aside money to take to church, but this person forgets about himself or herself?
Yeah.
So the basic principle we normally tell people is that make sure whatever income you get, pay yourself first. And we are not saying whatever salary you get, it is whatever income. Okay. Because you don't just earn from a salary. You could be having some gigs, some side hustles.
Yeah.
If you get some income, that money that is coming to you, whatever it is, you put aside part of it. The whatever amount you decide, but so long as you can be able to maintain and be disciplined, that is a starting point.
Okay.
I will not talk about the 20s or the 10%. I will talk about, people just try to test yourself. Just tell yourself that every month I want to keep aside 1,000.
Yeah.
Once you can keep up with 1,000, you'll realize that you can even maybe put aside more and save more. Yes, and invest more. You just start from somewhere. So long as you've started and you want to maintain that trend, that's the starting point.
Okay.
Yes.
Why do I feel like you are taking financial planners off the table now? Because now you're trying to tell us, mimi mwenyewe, I'm able to determine how to use this money na niipangie vizuri. All right? So then I wouldn't need an expert to do this for me.
Okay, it is twofold. If it's a business, then you take a different route. If it's personal finance, with discipline, you can do it for yourself. You don't need a financial advisor. To some extent, you don't need. Unless you cannot be able to maintain the discipline that you've set for yourself. Now, I'm assuming you earn 50,000. I like using 50,000. Now, I'm assuming that your 50,000, basically, the problem we normally have is that people try to think that money is a lot. And you spend until you reach an amount is when now you come back to your senses and you are like, today is 10. It is 10. And if you look at your balance and you're like, no, this can't be. Now that is when discipline starts coming in. After you've already, dished out part of it, you've already spent and you can't trace where it went. So literally, what it means is if it is 50,000, let's assume 10%. Just give yourself 10%. And that should be the first thing to do. Now, 10% of 50,000 is just 5,000. Just make sure you have a savings platform, an investment platform. Throw the 5,000. Do not plan with 50, plan with 45,000.
But this is where I think many people also have a problem with you guys, because I have my 10K here.
Yes.
Na najaribu kuangalia maze. First of all, my expenses are even more than this.
Because you are living a lie. You are not being realistic.
Okay.
Let's come to the reality. We are being realistic. And let me tell you one thing. I normally challenge people to test it on their own. By just simply asking you, how much do you take home? How much do you make as an income? And this, nowadays, from your M-Pesa statement, you're able to see whatever money is coming in. If you earn through M-Pesa, if you pay through M-Pesa, some of them even in cash. Just track through. You realize that you get a lot of money. But at the end of that period, you don't have the money. You spend a lot in between. Now, the problem is people struggle to live within or beyond their means. I will not talk about live within your means. That is a wrong advice. Living within your means means whatever you get, everything, you spend everything. You don't borrow because you're living within your means. But you are not also retaining anything. So you should live below your means. The matrix is simple. Whenever you realize that you are paying rent, whenever you realize you're paying rent more than 20% of your salary, that is the starting of the problem.
But you realize most of us take the kufa dereva kufa makanga route.
Now that is the problem. And nowadays, that's why I started by saying the technological advancements is also a blessing in disguise. It makes life so easy, convenient, and everything within the reach. At the same time, if you don't use it well, it can be a problem. Because borrowing on mobile platforms has become so easy than even thinking. And people plan with money that they don't have because of it is too available. Too available. You can simply get Fuliza. I mean, you don't even have to ask yourself. Someone only checks on the Fuliza limit. You don't have money, but you're budgeting with
the Fuliza
credit. You're budgeting with a borrowing. Because you are in your mind, because it is too available and you always get it. Now something tells you that this is your money. It is not your money. It is a debt.
Do you think that is where they get most of us off the track?
That's why
because it's become so normal that Fuliza is no longer seen as a debt.
Yes, it is normal, and it leads to impulse. It leads to impulse. You walk into a supermarket or somewhere, and then you see some nice pair of shoes. You don't have money, but you know at the back of your mind that I have some Fuliza limit. And you saw some message they sent you that your limit has been increased. What happens in your mind? How do you respond to that? That is where the problem starts. So discipline requires you to know that it is the money that you've set aside to spend that you have. Do not budget with what
you don't have.
And where possible, it's advised that I'm not against mobile loan platforms because I personally have used them before. If you want to start doing that discipline, remove all those applications from your phone. So that they are not available to you. That is the starting point. Remove them from your phone and just tell yourself that I don't want to borrow. Do not live on borrowing because this vicious cycle is very difficult to break. Once you start, you will always, you get money and you settle and you borrow again so that you continue surviving. That cycle is not easy to break until you have that discipline to make sure you know that this is what I can be able to spend. What you actually have. And that is the point. If you can reason like that, then you will cut off that burden of always paying and borrowing. Paying and borrowing. Yes.
Okay. And that leads us to a very interesting topic of loans and debts.
Yes.
And I feel like we've been brought up from a perspective of fearing debt, and are not really learning how to use it well. First of all, so I'd just push a direct question to you. Is debt and loan it's the same thing, right? Is debt a bad thing?
I mean, I will say without hesitation, loans and debts are very good things. Please go for them if you can. The only problem that people do is that why do you borrow? That reason of borrowing is the problem. You need to borrow to invest, to increase value, to add value. Do not borrow for consumption. That is where we go wrong. Now, I'm assuming you're running a business. And in this your business, maybe you wanted to improve on something that will add value. Right? And you don't have the money. Go for that debt. Go for that loan. Now, in accounting and in finance, what we do, even when we are doing our returns, interest or the cost of borrowing that loan is tax allowable.
What does that mean?
You do not pay tax on the interest that you pay when you borrow a loan. Yes. So that is a relief. It is a tax relief to the company or to the business. So for business people, if you can be able to get a loan And as you file your taxes, whatever interest or the cost you are paying on this loan will reduce your taxes that you pay at on the end of the period. Yes. Okay. So it is better for a business to run on the loan. So running on a loan is not a problem.
Yeah.
When you come to individual, in the livelihoods now at individual basis, not on the business side.
Yeah.
No, on the individual side now, when you borrow and you are borrowing for consumption, that is the start of the problem, because already this is a liability.
Yeah.
As you consume it, remember, consumption never ends. You will consume today, tomorrow you still consume.
So you're saying,
what do you think happens when you're already consuming a liability?
Yeah.
And you will still want to consume?
You're saying it's okay for me to sleep hungry as long as I don't borrow, I don't take some Fuliza to go and buy food.
For you, that is the end of the stick. For you to be sleeping hungry, there was a mistake that already happened.
Yeah.
You failed to plan for it.
Yeah.
So if you failed to plan, you will always find yourself spending.
Yeah.
And the danger is that if you don't plan, and you get some money, like most people receive salaries when they still don't know where this money is going. Like now, today is 29th?
29th, I think.
Now, you realize that public servants were paid even some 4 days ago.
Yeah.
Some of them receiving salaries on 24th and 25th, thereabouts.
Yeah.
Now, these people, someone just checks. Most of these banks nowadays, they even send notifications.
Yeah.
So there's a notification on your phone. Your account has been credited. Now, the excitement starts from there. You start thinking you need to buy this. You need to buy this. Remember, you did not plan for it.
Yeah.
And at that point, that is a gratification that is instant.
Yeah.
You don't think that, for how long am I supposed to, this money is supposed to sustain me. People forget that.
Yeah.
You forget that you received your salary on 25th, and you need to survive up to the end of the following month, to the following 25th. You start spending now without thinking of that period. What do you think will happen 10 days after? The money is gone.
Yeah.
You cannot be able to even pay yourself. You can't save if you are hardly keeping up. You don't have food.
Yeah.
You cannot save.
You can't save.
That's why some people try to embrace discipline by saving, but they pinch off that saving before even the month ends. So at the end of the day, you've not saved.
Yeah.
I know people have it. Someone has a money market fund.
And it takes it.
You get your salary, you throw it there, and then somewhere within the month, you find yourself, you've already pulled it off all of it. So, it is still the same cycle. You've not done anything important. You've not made any step.
Yeah.
Yes.
So in other words, because we have this conversation a lot with my brother, it's called Chris. And we say, you save a lot of money, and then by the end of the month, you've withdrawn the whole of it.
Yes.
So does it get to a level where we just save because we want to, we want to make ourselves feel good?
Exactly.
Yeah.
Now, this is someone who has some knowledge.
Yeah.
This is someone who has information.
Yeah.
This person knows very well that I should be saving something.
Yeah.
Now, he has enough discipline to put it aside. Pay yourself first. That is the policy.
Yeah.
This person does that.
Yeah.
But this person forgets a very critical aspect.
Yeah.
This person did not plan on the basic expenditure that this person is planning to do.
Yeah.
So if you fail to plan for the remaining part after paying yourself, you will find yourself, you will spend until you reach a point where you realize the money is not enough. So what do you think of? You don't want to borrow because you already know you have money.
Yeah.
You will go and pull it out and spend the whole of it until you can even borrow.
Yeah.
So at the end of the day, you are not making any steps.
Which then begs the question then, why do we save?
Now, you save to create wealth.
Okay.
There are savings. Savings is divided into sections.
Yeah.
You save for emergencies. People should have emergency savings.
Yeah.
Emergency savings is what you can do, for example, in the money market funds.
Yeah. And
emergency savings should be, the recommended amount should be about 6 times your net income. So if your net income, for example, is 50, you need to have some 300K. Somewhere. So that, because you realize that a short illness will consume everything from your savings if you don't have this kitty.
Yeah.
So this emergency saving is not wealth. This is for emergencies. Emergencies are always there.
Yeah.
Now, there is this long-term savings that is now creating wealth. Creating wealth is now, you hear people talk about my net worth.
Yeah.
Where is the my net worth coming from? That is the wealth. So people should challenge yourself. Besides the emergency savings, the short term, which should be at least 6 months of your net income. I'm not talking about net salary, but I'm talking about net income.
Everything.
From whichever source. From whichever source. You should beef up something that from your basic household expenditure. If you normally need, for example, 40,000 to run your errands for the house for a whole month, you need to put that one 6 times and put it in some emergency fund. Now, once you have that kept aside, that extra emergency, now build your wealth. Yes? Now, this wealth is something which is long term. And this is where the securities come in. For example, treasury bills, treasury bonds, those which take time. Now that is wealth. And now the essence of saving comes there. This other saving is saving for emergency. Yes. So it is important because emergencies are there. You don't know when you'll fall sick. You don't know when something will happen. Maybe you are like this, and then maybe one of the electronics you normally use. Something happens to it. What do? You need money. Where do you get it from? If you don't have your emergency, that's when you start borrowing. You'll go to Fuliza, you'll go to all these other platforms.
So given your knowledge of the market now and the financial institution, how easy is it for an ordinary person right now to get a loan?
To get a loan from bank?
Yeah, from whichever. You can break down maybe the
okay. When you talk about loans,
given how the market is right now, how the economy is right now.
Now, given the realities we are having, even if you are running a small business and you want to approach a financial institution, either a SACCO or a bank, you realize that on individual basis, if you don't have enough security, it's a challenge. They might not give you much money because they're also trying to balance their risk. Remember, the CBK reduced the lending rates. Now, if the CBK reduced the lending rates, and again, given the economic performance, there is less money in circulation, the risk profile of people who don't have enough security is high. So also these financial institutions, they want to give you something they know, that even if the worst comes to the worst, they can be able to find a way to recover it. Yes. You know, however much we normally say that the higher the risk, the higher the returns. But whenever they're giving you their money, they really have to employ due diligence.
So what is the first thing they look at when you approach them for a loan?
So when you approach them and you are an individual, one of it, you have to tell them the purpose of the loan. Assume you want to go for asset financing. You tell them that now my security is my pay slip. If you're a public servant, for example, they will want to see how much you earn. Then there is the recommended amount that they have to leave you with, because you have to survive at the end of the day.
It's a provision of the law, right?
Yes. So security has to be there. And public servant, their security normally is the pay slip. Because there is somehow some guarantee that you have a salary.
They'll take their money from
there. And even if you're not a public servant and employed in these other establishments, they will need a confirmation from your employer that you are in employment for a certain period, and whatever you earn is this, so that the employer also certifies by signing and agreeing that this is my employee, and this person, I'm paying this amount. So that will act as a loan in a way, will act as a collateral or a security, and that's what SACCOs do. SACCOs nowadays, they want employees to pass their salaries through the SACCO itself, so that they get to have your history, and that will act as your security. So getting a loan, you can get it easily when you have collateral security. Without security, you might not really get it so easy. If you get it, you will get a very small amount. So that's why small business people struggle, because they don't have security for big loans. Someone might be very, ambitious to start running something big, but if they don't build up their history. But the biggest problem again in our country is that most small businesses, they don't keep their books well. When you fail to keep your books well, you don't have a history. And especially these people who run their businesses and they mix personal finances with business finance, it becomes so difficult for you to prove how your business is, whether it is going concern, making profits or not. Because you go to a bank, they want to ask you, give us the bank statements of your business. Now, the bank statement of your business is your bank account. And they want to see, nowadays we are in a digital era. Do you know that the government has also moved to e-citizen? And do you know that when you're opening a bank account, your PIN is used there?
They actually require it.
Exactly. When you're registering M-Pesa, your PIN is required. Why do you think so? these people, the banks, they can be able to, it's like a mirror, they can be able to see all your financial movements. So as an individual, if you mix your personal finance with that of the business, where is the line?
Yeah.
Where is the line to show that this is for business, this is mine? So if you go to bank and you say that I'm an owner of this business, you have the documents, registration and all that, they will want your audited accounts. Now, if you don't keep your books well, you may not be able to prove that your business is viable, because the business is what should pay the loan.
Yeah, not you.
Not you. So if the business do not stand on its own and the books are not well in order, that is the greatest undoing. And most small business people, they struggle with that a lot, because they treat business as part of them. And good practice is the business should be a separate legal entity
from you
that will stand on its own, have its books, its accounts on its own. You go to bank, they will ask you that you present, and they will look at your history and say, this person is making profit. There is chances this person can do better if we boost with some loan. So at least your process of getting that loan will be easier. So that's why most SMEs find it difficult to get loans from banks. They run to microfinance. Now, when they run to microfinance and chamas, that's why there is a lot of chamas around. Chamas, they don't really look at the big collaterals. They don't look at the details. They don't care whether you even keep your books well. What they care about, tell us what will come and pick if you don't pay. You see?
Like that.
Most of them are also based on trust. Where you say that I know the history of this person, they will pay. So that agreement makes, accessing good loans that can help you boost that business is difficult. So people just need to restructure well. Yes.
Okay. So then what is that one thing the bank never tell us, but they look at when we go for a loan?
Now, the bank, you know what? How do you think banks survive? They have bills to pay. They have employees to pay. Bank is a company. Shareholders are there. Shareholders invested. They need money. That's why dividends come in. Those shareholders have entrusted the management to the board and the CEO that please, we've given you money.
We want returns.
We need returns. If you pay less returns, they demand more. Now, the CEO will come down and say, guys, we have to do business. Right? Our business is on money. Giving money and making money out of it. So when you approach a bank and you want a loan, or either on personal basis, whether you have a security or maybe you're relying on your pay slip or that, what they're looking at is how easy will it be for us to recover this money. They're normally they're normally looking at the possibilities of losing and gaining. Yes. They are looking at your risk profile. For you, you might even be having a logbook for a car, for your car. Take that logbook there. But that logbook is not enough. It could be a logbook that you just bought a car last year. They will not just pick the value like that. That's why they will have to take it to a value. They just want to be sure. Are we able to get back our money in case we give this person money? So banks will not tell you that they are really interested in whatever they get out of you. They will try to bring all this, they want to also advise you on how to run your business, but their major interest, they're also in business. So you need to know that banks are in business of making money.
So where exactly do they earn most of their money? Is it through loans or through other means?
They also, banks do a lot of diversification. Banks also, they invest those your monies. If you leave your money sitting in a bank account, that money is not kept in that bank. You might be having 10 million at KCB. Even if your branch is in town, you are passing somewhere there with somebody telling, I have 10 million in there. That money is not there.
In fact, we joke a lot that you people be careful, my money is inside there.
No. What they do, they pull together this money. That is the essence behind even insurance. They pull this money together and they say, we have this from this person, this from this person. It is in their accounts. Then they look for investment opportunities and invest this money. They buy government securities. And also, even if it is your money, remember, there is an amount that you cannot just walk in and withdraw. They will tell you to give them a notice. Why do you think there is a notice? Because that money is not there waiting for you.
There is a specific amount you can't just walk in and withdraw.
No, you can't. You have to give them a notice that I need this money, and they will tell you, come for this money after 3 days.
Really?
It is your money, but it is not there waiting for you. They are using the money They are investing the money.
My goodness. I think that would only apply to rich people, because for someone of my stature, if I come and you tell me I have to give you notice for me to get my money, then I think there will be some very serious problems.
Yeah, so they don't leave the money sitting in your account.
Yeah.
No. So they're trying to spread risk.
Yeah.
And they're also diversifying. And they're investing in several ventures.
Yeah.
You know, it is the banks, they run their MMFs.
Yeah.
Banks also nowadays provide insurance. Banks also do real estate investments.
Yeah.
They invest in government securities. They're really trying to diversify to maximize the returns they can get.
Okay.
That's why they even have fixed deposit accounts. They will tell you that you can invest with us. Put this your money and lock it for 6 months.
Yeah.
After 6 months, we will give you this return. Where do they get the money to give you? Yet they're also in business. No, they pick your money.
Yeah.
They go invest it in highly profitable ventures.
Yeah.
The return they get, they share it with you. And they make their money.
Yeah.
That's how they make money. But most of it comes from loan.
That's interesting.
Yeah.
If banks are this careful with doing, I believe that is what is called risk analysis.
Yes.
Knowing who is going to pay and determining who is going to bring back our money. Why then are we told that banks are only interested in what money comes into your account and not what goes out? Because I'd easily come and say, Sam, you give me 1 million shillings, let me pass it through my account just for the bank to see that I have some money going around, and then they can give me a loan.
Those people...
Don't you think that contradicts?
Okay, what happens is they do risk analysis.
Yeah.
And they also check. That's why they look at our history. And digitization has made it so easy.
Yeah.
And that's how they even find out those who are doing money laundering.
Yeah.
Money laundering is just passing it through the system.
Yeah.
To clean it so that it is seen like it is coming from a clean source.
Yeah.
So they really have to ask you, even if you're withdrawing that money, even if you are taking a certain amount, you could be taking a certain amount to below the limit. For example, it's below 1 million. You just put it in there.
Yeah.
They will put some mark there. The system will monitor. Because they want to know the source of that money.
Yeah.
There is a threshold that if it reaches, then there is an alert. They want to start following it up. You could be seated here pretty, but you know they're already on the ground trying to monitor what kind of business are you doing.
Yeah.
They've already tapped into your M-Pesa transactions. They've already tapped into your communications, trying to know. Yes.
Which really gets me, because if I'm a bank, I'm in business, right? Say, let me give you a quick example. I'm in business outside there. I'm selling, say, shoes. I don't care where you got the money from. I just want you to come and buy the shoe and leave. Why are banks then this strict and all that?
Okay, they have to be because of provision of the law.
Oh, okay.
Money laundering is real.
Yeah.
And there are people who also do tenderpreneuring in most of government entities.
Yeah.
And you are being told that for you to get this tender, give us this money.
Yeah.
You bring it in cash because they don't want to be traced, right? Now, because they don't want to be traced, they have proxies, either companies or individuals, through which these individuals will pass the money through the banking system.
Yeah.
That's where, if they notice that you're not running a business and you keep putting in money, they'll want to know, where is this money coming from? Because it's also a provision of the law. Remember, these people are licensed. They have to work under the law. That's why the central bank is there to monitor the operations of these financial institutions. So it's not entirely them, because yes, they're in business, but they also have to work within the provisions of the law.
Yeah.
So if you cannot prove the source of your money, they will, flag it. Yes, there is money coming in here. This person is not doing business. Remember, that your PIN alone is tagged to everything that you do. And it can show your history.
You file nil returns.
You are filing nil returns. That's another area. Yeah. So, you are there filing nil returns, and in a year, you deposited 3 million. And you are claiming that you don't own any business.
Yeah.
Where is this money coming from?
Yeah.
That's how they get people who do money laundering.
Yeah.
They now know that this person is just a channel. And because they look at the frequency, you put it in today, after 1 week, it is out.
Withdrawn,
After a few days, it is out.
Yeah.
So it is just passing. Yeah. So they really have to also follow the law and make sure that they also do legitimate business.
Yeah.
They earn what they need to get in terms of the interest that they charge you on the loans and any other incomes they create. But at the same time, they have to operate within the law.
Okay.
Yeah.
Talk to us a bit about interest rates, because I believe that is where most of us get it wrong, especially when we are going for loans.
Mm-hmm.
What do you think every small business person and every individual should know about interest rates before they sign that what do you call it? That loan form.
The loan form.
Yeah.
Okay. One thing is one thing that people normally overlook is most people are excited with the end product, with the short-term gratification.
Yeah.
And we really don't take time to look at the terms and the implications. I want to give you an example that people can even relate with. We've heard stories of someone going for a motorbike loan, the youth. And then at some point, they cannot be able to pay. The motorbike is being repossessed, and they are there shouting and saying this is unfair and all that. Now, this thing happens a lot. And even people who go for motor vehicle loans. Yeah. People do not take time, even businesses. There are businesses who cannot keep up with the loans that they took to grow the business. Yeah. So one undoing is people don't take time to look at the long-term implications. Yeah. If you go and you want to apply for a loan, whichever, and nowadays, by the way, there is something that has really come up, current trends. There is lipa pole pole. Yeah. You just pay a little bit, a deposit, a down payment. You go with whatever item it is, then you pay daily or whatever intervals that they've given you. Yeah. Now, in that instance, your mind is corrupted to only look at the current value, which is the deposit.
Yeah. It's just 5,000 and
you just say, I need this iPhone and I'm just paying 5,000. You are forgetting the long-term implication of it. Yeah. You don't know that most of these lending platforms, especially which are not in the main banking system, these other ones, the mobile platforms and these other microfinances, some of them have very high interest rates because your risk profile is also very high. Remember?
You might not pay.
You don't have a security. So the risk profile is so high. So they're also trying to really maximize on their chances. Those people who pay that high interest, at least they're able to benefit more so that even if there are few defaulters, they can balance off their losses. So your risk profile is so high.
That sounds so evil.
No, it is. But, the risk profile is what is the problem. Yeah. Remember, these loan apps, even yourself, you can go to, whatever loan app, search for them. They'll give you money. Yeah. They don't know you. They don't even ask you whether you have security. They'll just ask you, where do you want to use the money to do what?
Yeah. And they'll just lie.
I mean, you just lie. You say, hey, I'm running a business. Yeah. What is the proof? They don't ask you for registration or anything like that. Yeah. Now, your risk profile is so high. So whenever they give you this money, they have to charge you a very high interest rate. Yeah. That's why some of them were even flagged the other day by the central bank. They were flagged they are operating outside of the law, even their recovery methods. They're trying to threaten and things like that. Yeah. So people do not take time to check on the terms. You look at the short term, where unaona you need to pay just 5,000 and you have your motorcycle or you have whatever machine or whatever electronic. At the end of the day, for you, between now and the time you're finishing to pay, you don't think about that. People need to take time and do not get excited. Even if you go for a motor vehicle loan, the car is there. And those people, they really play with your psychology. You know what they normally do? Yeah. Even those institutions that give motorbike loans, you know what they do? Myself, I've been in those places and you can see this kind of psychology. You get into their offices and you realize that they are not vendors, but they have the motorbikes or the vehicles there. You know why they do that?
They have stock.
They want you to be excited already that actually I can go with this car now.
Yes.
You realize
that? Yes.
So when these youth get into those offices and they are seeing the motorbikes are here, they're negotiating on this desk and the motorbikes are here. And they even tell you that you want this one or this one. You see, they will even point it at you and tell you the difference. And they tell you, this is more powerful. This engine capacity is higher than this. This one is very stable. Remember, you were already discussing the functionalities.
And you've not even...
what they're trying to do is to play with the psychology so that you get that excitement. Once you get excitement, then they pull for you the forms.
Just sign it without reading.
When you have your guarantors, you have, even if you're the security, you have them, right? They will pull and tell you now, this is the form. And the form has everything. The terms and conditions are all there.
Very clear.
But yourself, because already you are excited, you will not take time to read through. And for them, they also know that once you get into that environment, your thinking is, I can actually go out with this vehicle here.
Now.
So you forget to check on the terms. They normally state in the terms, for example, if you default, this is the penalty. If you default, and then the periods are there. You don't check in those details. Now, whenever you sign and everything is complete, you go away with whatever item. Then you realize that at some point that the interest rate is going so high. The problem is not them. You did not take time to check on the terms.
Because I've had so many people complain that, you know, I took this loan, and after paying it for a year, say maybe paying 25,000 per month, I realized that 24,000 was interest and only 1,000 was going to the principal. To the principal amount.
So that's why we normally tell people, if you want to go for a loan, please look at the start and the end. Ask very categorically. Leave alone all those stories. Yes? Please ask to know and do a calculation for yourself. Ask them, I will pay this loan for how long? How much am I remitting as installment per month? Remember, installment has both the principal and the interest. Then go to the interest side. They will tell you interest is only 3% per month. Interest is only 3%. Now you need to don't look at the 3%. Look at the period. Some of them are very tricky. They even give you the interest per day. They don't, and they want it to appear less. 0.03%. So your mind is looking at 0.03. You're like, I'm only paying interest of 0.0. You're forgetting this is per day. This is per day. They break it down so that it looks a small amount. If you take this interest in a year, my friend, you're paying way a lot. By the time you're finishing paying for this item, you've paid like double or more than double the price of the item. If this item was not adding you value, you are the one who is losing. You've lost money, and you'll be struggling to pay it back. So people really make a mistake of not looking at the implication. People rush to get the loans. Loans, you don't need to rush. Take time.
That is a very interesting way. One of the most feared loans, and most people say it doesn't work in Kenya, maybe you'll explain to us why, is mortgages. Why do you think mortgages has become such a huge problem in our country?
If you look at mortgage, because mortgage is basically financing these properties. So people who can qualify for such properties, because for example, I mean, you want a mortgage, you don't have collateral security, you don't have a good job. If you're a public servant and you want a mortgage, for example, you want to buy land somewhere, or you want to build, you already have land, you want some property somewhere. So you realize that mortgage is a huge capital investment. So you need sizable amount of money. Most people, average and below, people who earn average and below, I want to give an example, for example, primary school teacher. For such a teacher to go and take mortgage, it will take a lot of time, because whatever they need to deduct and leave you with something to survive on, they will deduct little, and it will go for a very long time. And this also might derail you. So people normally look at, how long will I need to pay this? And how much do I need? You know, property prices are also gone up, especially in near urban areas. So it is within the reach of very few people. Like now, this area here. You realize that for you to buy a property here, you need some good money. If you don't have it, you approach the bank for mortgage if you have the security. So if you go for that mortgage, you must have the capacity, and they will look at your risk profile. Only if you qualify, they will give you enough money for you to buy whatever property or to build it where you want. So that's why it's not within the reach of so many, medium and low level income earners.
Let's talk from a perspective of I have, say, a good job, a very good job, earning some very good money per month, but still somehow it doesn't work for some people.
Okay, it depends.
Why do you think that is?
It depends with now individual decisions. Because on one side, I started by saying that loans and debts is good, even on individual basis. If you take mortgage, the interest you pay on mortgage is actually tax allowable. When the tax that you need to pay from your income tax, you will less that interest mortgage before they calculate it. So it is a benefit to you. But most people, especially those high income earners, you realize that maybe they don't want to go the side of the mortgage side. Or maybe some of the mortgages come with conditions. remember. Some of the mortgages come with conditions, and some contractors may not work very well with those conditions of the banks. Remember, if you take mortgage to build, for example, a rental property, this rental property, the bank or the financier of this mortgage, they want to be sure that this property will be able to pay back itself, right? Despite security. Security is for in case of default.
In case something goes wrong.
Yes, they have to focus on the property you're building first. So you realize that they come, nowadays, they don't just give you the money. They want to do it in stages from their own perspective, because they also have investment bankers nowadays. Those people who want to monitor progress. And to some extent, they might also recommend the type of contractor to use.
Okay.
Yes.
They go in that deep.
Exactly. We're in the current trends. Even the design of a house matters on the market value.
My goodness. Okay.
Even the design itself matters. So what if they go for a very high-end architect to come and do it, because they want the value to be that up, so that they're able, remember, their interest is to get back their money with the interest on it.
Yes.
You get. So they want to make sure that they get it. They don't want you to come up with, to bring maybe some contractor somewhere to do something that will not really sell, and you are risking defaulting, and when you default, they are the losers. Yes. And it will now make them lose whatever they wanted to get. So some of them have conditions where they have to dictate, and they do it in bits. So they say that this is the contractor that is to be used. Then that contractor that is to be used, remember, the cost is high, and the cost is on who? Cost is on you. Remember that.
You will pay the money at the end.
Exactly. And remember, if you are given opportunity to go for your own contractor, you could negotiate. But now, if you go for registered contractors with them, those whom they've entrusted to do these of their projects, now their cost is higher. So some of these people who are maybe having high income may shy away because of all those conditions. The conditions are so many. Yes, they want to control how everything is happening. And maybe someone wants freedom. I just need the money. I do my thing the way I like. But they will not leave it off to you like that. They have lying down conditions because they want to get value out of it. And it's a lot of money. They want to give you, for example, 200 million, 100 million. They cannot just let it off like that. They want to get the maximum. They want to make sure that it comes out well. You get the tenants, or you get, if it is maybe for business or something, you get it. And then they are able to
get their money back.
Get back their money.
Okay.
That's why people shy away in most cases.
Okay. Because now we talked about asset finance, and I forgot to ask you, because some people would... Is there a difference really between asset finance and hire purchase?
There is, because when you talk about asset finance, it means when you approach a financial institution, they're not giving you money. They're buying for you the item.
Then you pay them back.
The item. Then they've just financed it for you. Now you pay them. You get. For example, you want a car. You say that in the loan form, they've written a car loan. Now, your interest is not the money. The interest is the car. They will get you the car. They will ask you now, these cars, which car do you want? I want this. They will buy it for you. Then they now put their profits on whatever they spend. And they now tell you, now pay us. Hire purchase, where you put a down payment, then you agree on the period and the amounts, the installments that you will be remitting on an agreed interval within a certain period.
So hire purchase, you deal with the seller directly?
You deal with the seller.
Okay. Yes. So it's an arrangement between you and the seller?
Yes, it is you, the buyer, and the seller.
Okay.
Yes, where now you put a down payment, like for example, these mobile phones nowadays, lipa pole pole, right? Now it is the seller who now has to come up with the mechanisms to try manage your risk, the risk of losing, or maybe the risk of default. That's why they nowadays have phones where if you don't pay, it goes off. That is their technique of trying to safeguard themselves against default. So that if you default, you won't use it. So you have to pay. So it is an agreement between you and them. Yes.
Okay.
Yeah.
Why are... Because we've gotten so many complaints about what do you call it? This finance institution, what do you call them? I've forgotten. These mini banks,
microfinance.
Yes. We've gotten so many complaints about them. Why Why are they necessarily so evil? Let me ask that in a layman's language.
Okay. You realize most people run to SACCOs and microfinance.
Yeah.
Because access to credit is somehow easier.
Yeah.
They don't have a lot of conditions.
Uh-huh.
So because of that, they have also to maximize on their risk of losing money.
Yeah.
That's why some of them are also flagged for charging exorbitant interest rates.
Yeah.
And some people call them evil because people do emotional financial decisions. Where, because nowadays a lot of people run to the microfinance and SACCOs.
Yeah.
Most medium and low income earners run away from banks. Mainstream banking is left for those people who are at some scale of salaries and incomes. So you realize that these microfinances, to some extent, they just operate within the law.
Yeah.
The only problem is the category of people they deal with, the personnel they deal with.
So it could be the people, not them.
No. The personnel they deal with do not have security.
Yeah.
The personnel they deal with, their risk profile is so high. So what do? To compensate on that?
Yeah.
Some of them charge a little bit higher interest rates.
Yeah.
Because access is so easy. And the people will always go for them because it is easy to access the loans.
Yeah.
They will give you the loan so easily. And if you go to the bank will not give it to you because you will not reach the standards which they want. But these ones, they will give you. The problem is the cost now will be higher.
Yeah.
You might think the cost is low, but at the end of it all, it will be higher because of your risk profile. So they are not really the evil, but I think they're also just trying to also manage whatever is within their reach.
Yeah.
Because they're also in business, they have to pay bills, they have to earn out of it. But the risk profile is also very high.
Yeah.
In fact, the largest number of employees in the microfinance sector, the largest of them are debt collectors.
Yeah.
Because that is the business they're doing. People who are out there trying to get back people to pay.
Yeah.
Because these people don't have security. The securities they have might not be enough. Some of them even take security of their house.
Yeah.
Yeah. What happens with your house? The value of your house. And sometimes you've heard of cases where they even go to remove the roof of a house.
Yeah, they do it in the villages.
Yeah. So you realize that is the category of people they deal with. So they have also to come up with ways in which they can also safeguard themselves by increasing the interest a little bit.
Yeah.
And to some extent, it doesn't go well with some borrowers.
Yeah.
That's why some borrowers shout out there saying, these people are very unfair.
They really cry.
Yes.
They really cry.
So, especially these SMEs, the small business people, sometimes they get it rough. But I think the environment through which the microfinances operate, sometimes it's not very easy to maneuver. So they have also tried to find ways to stay afloat. Yeah.
So the next Nini will touch a bit on your analyst bit.
Yeah.
And I'd like to, is there anything like a sure bet investment? Because a while ago there was this huge conversation, I'm sure you probably had it. Someone dared people to tell him what business you can do that could earn you 50,000 per month?
Okay.
Yeah. So is there anything like a sure bet investment?
Okay. There are those safe investment avenues. But then in investments, we normally say the higher the risk, the higher the returns.
Okay.
So, so when you talk about safety, remember returns will be affected now because of the safety aspect of it.
Yeah.
But then they're also in twofold. I'll talk about government securities. Government securities will rank the safest investment avenues today. You know why? Because the government cannot default with your money. You have to pay. So that is the security you're talking about. Where you are sure that if I put my money in a government and a treasury bill or a treasury bond, because bonds normally run for a long period, over 10 years and above. But bills, for example, you put your money there and you say, I need back this my money after 5 years or 6 months. This money here, you know very well that it is guaranteed you will get it back with the agreed rate. So they rank among the safest investment avenues. If you leave aside the government securities, when you come to these other investments, there is no guarantee. You cannot talk about safest. No. These other investments, the higher the risk, the higher the returns, but with some lines drawn. That's why most youth find themselves betting because they have, they've seen the potential win.
They're trying to cheat the system.
Yes, you've seen the potential win. You are seeing there, you are putting your odds and you are seeing, I could get 20 million. I could get this. No. those are not realities.
Yeah.
So I cannot talk about absolute 100% return on an investment.
Yeah.
No, investment avenues are so many, even if it is real estate.
Yeah.
Assuming now yourself, you start putting up your real estate investment beside here. Maybe you've secured some land, you want to build, a rental house, whether it's for business or for, occupancy by people. I mean, you don't have guarantee that occupancy will be 100%.
Yeah.
All you can do is just to take risk. Given you can just take some market data and say that chances are very high that I could get 90% occupancy within 1 year.
Yeah.
Chances are very high I can get occupancy in 2 months. Yes. So that one is never cast on stone. You might come up with an investment or you might invest your money, but the opposite happens. Yes. So for investment, both long-term and short-term, especially short-term, you cannot talk about 100% guarantee.
Okay.
But now it depends with the line of investment, because investment lines are so many. Yes.
So what then are the investment opportunities for low-income earners?
So low-income earners, basically, the most one one that will give you higher returns that I can maybe advocate for is do business.
Yeah.
Doing business has high returns. I want to give an example.
Yeah.
Like now the states where you people operate here.
Yeah.
In the evening when you stroll around, you get someone in a trolley of eggs.
Yeah.
Now, this person maybe just purchased 5 trays of egg.
Yeah.
Each tray, for example, at 250.
Yeah.
Because it's now a wholesale price, 300 shillings. Now, 300 by the 5 trays, that is 1,500 Kenya shillings.
Yeah.
This person is selling each egg at 35 shillings.
Yeah.
Multiply 35 by 30 per tray by 5. Yes.
You want me to do that?
Yes,
okay.
Simple math.
Okay, so 35 by
35
30.
shillings by 30.
By
30,
5.
30 is 1 tray, right?
Yeah.
By now 5 trays.
Okay.
How much is that?
52.50.
52.50.
Yeah.
How much did this person purchase this egg?
We said 1,500?
Yes.
That's good money.
So look at the profit margin is more than 100%.
Yeah. But why then are people not doing this thing?
So if you remove 30% for the cost of production and all that, remove 30% of the 5,200, multiply, get 30% of that. Yes.
Minus 30%, right?
Yes.
I don't know if that will come. Is 3,000, you get 3,675.
Now look at that. You spend 300, you get that. So the surest one way to get the highest returns is do business, especially for the low-income earners.
Okay.
Now there is this coming up of the money market funds, these short-term saving platforms, especially for emergencies and all that.
Yeah.
These savings platforms do not give you that good interest because they're also short-term, and again, they are also low risk.
Yeah.
They are low risk. Remember, if you're doing business, it is high risk. You know why? You could maybe boil those eggs.
And no one buys.
Yes. The same way you normally walk around the streets, then you just realize that no one is buying your eggs.
Yeah.
What happens with it? Or maybe you're running a restaurant. Yes?
Yeah.
You're running a restaurant.
You need 5 crates.
Then you are so ambitious.
Yeah.
You've done a lot of chapatis and all that.
Yeah.
What if things turn around and you don't sell? For example, we've had some chaotic elections or periods where there are also, instabilities.
Yeah.
What happens to businesses? Businesses are in a nosedive session.
Yeah.
And you still pay rent, you still pay your bills and all that.
Yeah.
So the risk is a bit high, but the returns are very good. So high risk, high return.
Okay.
The most recommended one is do business, invest in a business. Business will give you good returns. You'll buy that your shirt.
Yeah.
You'll buy it at a wholesale price. For example, 600. You come sell it to somebody at 1,500.
Yeah.
Yeah. So
you
realize
markup
that
there.
doing the real business gets higher returns than looking for the safe avenues. So money market funds are the safe avenues that we are talking about, but the returns are so little. Now, money market funds are giving out as low as even 4%.
Yeah.
So that is very low. Yeah. So it's recommended that businesses, you see these mambogas, the small business people that do business.
Yeah.
Those people, their returns are more than 100%, I tell you.
Yeah.
The only problem is most of them mismanage.
Does it also cap on the mentality also?
Exactly. Let me tell you, we normally have this, this mentality that
Sisi ni mama mboga tu.
Yes. I've given you an example of someone hawking eggs and boiled eggs. That person do not sit down and look at the profit margin he's making. No. This person is like, me, I just sell eggs around. I mean, I don't have much money. So that mentality will not make you see the potential that you're making here. But for someone who wants to tap into that, this person goes home with 3,000 at the end of the day. This person, if you plan well with the 3,000, if you can get 3,000 every day, in a month, how much do you have?
That's a lot of money, man. If it's every single day, so then about 90,000.
Yes, look at that kind of money. Even if you are employed, what category of, what job scale will you be earning that 90,000?
It must be in the management.
Someone getting that, or even if it is 70,000, if you remove the eventualities, how many people go home with 70,000?
Very fair.
That salary scale must be so high, right? Now, this person earning that amount can do a lot of things. So that mentality of I'm just doing this, so they don't really take time to look at this will make a lot of profit. Their profit margin is more than double. And that, for those people who are really doing their math right, that's why you see some of them grow very, very fast. Someone started a small kiosk. All of a sudden, you see them expanding. Stock is increasing. They want more space. And at the end of the day, this person now is running a mini mart. It is not out of the blues. The profit they make is a lot. It needs financial discipline and making sure that you plan with it and you grow.
So you're saying money is hapa chini, hapa kwa nini?
There is a lot of money circulating down here. Let me tell you, these border people, you know, some of them go home with as much as 2,000 home. They've fueled, they've done everything, they've taken their lunch and everything else. But this person at the end of the month does not have anything. If that motorbike breaks down tomorrow, they don't have the money. Why do you think so? Because of the mentality that I'm just a border person. They don't really take time. And again, the present mentality, they have a present bias where they know that tomorrow I will make the same. I will make it tomorrow. So literally, even if I spend this one now here, tomorrow I'll still be on the road and make it. So that mentality is a wrong one. Yes, so that is an emotional decision. And that's why some of them are not even able to keep up with paying for these motorbike loans. They make a lot of money, but you know, there are also seasons when business is so low. There are seasons when it is so good. Now, ask somebody, that season when it was so good, how much did they keep aside? How much did they save? They don't have the money. Because they normally think that it should always be smooth.
But when you lay down this math to them, what they usually say is, ni rahisi kusema lakini kwa ground. Kwa ground.
No, it is all about lack of planning. If they plan, those people make a lot of money. In fact, some of them really do a lot of things. You will see about a person who is building a rental house. You will see about a person who is a landlord. These are people who've taken a step to plan with that money. So money, regardless of the amount, is all about financial discipline. Do you have the discipline to know how to spend it? That is the most important thing. It does not matter the amount. Let me tell you, there are people, I give you an example, that example when you were starting. You could be earning 50,000 today. You get a better job or a better gig, and you get more money the following month. It does not matter. If you don't change how you handle this money, the 50, even if you get 100, you still misuse it and it will still go away without you knowing where it went. So it's all about discipline, not the amount. We talked about saving, and I forgot to explore a bit, because they say it's hard. It's very easy. No, it's very hard to move from 1,000 to 100,000, but it's very, very easy to move from, say, 1 million to 100 million. Why do you think there is this disconnect? Because I've tried and I've never moved. So why is this disconnect? So I think it's a mentality issue.
Because a lot of wealthy people even swear by it. They tell you, and I've never, you know, it's very hard to move from 1,000 to 100,000, say. But some wealthy people say it's now, when you get to 1 million, Bob, it's easier to move from 1 million to 100 million.
It is a mentality thing. It is mentality.
Yeah.
Because let me tell you, if the problem is people do not have, people who have already stayed with the money.
Yeah.
Like someone who has already mastered the discipline of having money.
Mm-hmm.
There is that peace and comfort that comes when you have some money sitting somewhere. And you realize that people who don't have a lot of it, they normally have this discomfort, and they always want to, it's like this money is burning their pockets.
Yeah.
It's like this thing makes them uncomfortable. They just want to receive it and let it go.
Yeah.
No. People who've already mastered the comfort of just having it. And you can test it.
Yeah.
You realize that at some point, when you have money, you don't even feel hungry.
Yeah,
you just feel absolutely at peace.
We were talking about that just a few hours ago. You were saying you are more angry when you're broke.
Exactly. It is a mindset.
Broke. Yeah.
So those people who already have the money, they are not in a hurry to spend it. In fact, they want to bring more of it.
Okay.
But for that person who has not really made peace with money, it's not about peace.
Yeah.
Now, you've heard of stories of people who are employed. Someone earns salary today and tomorrow cannot show up to work. Why do you think that happens? Why do you think it happens?
You explain to me.
Because there is anxiety. There is anxiety. I mean, I have money.
Yeah.
There is anxiety. So, you want to really rush to spend it.
Yeah.
As if someone is chasing you and this is your money.
Yeah.
Yeah.
But the only place where I get a bit confused is I read a book. I think it's Rich Dad, Poor Dad. One of the principles of money, they say, is you have to also let it go.
Yes.
Yeah, when you let it go, it sort of comes.
But let it go where?
Okay.
That is the question.
Okay. Got your point.
Let it go where?
Got your point.
Let it go where?
Got your point.
That little money you have, go and spend it carelessly out there, that you are letting it go and it will come back.
It will not come back.
No.
Yeah.
You let it go in terms of do not be controlled by it.
Yeah.
Make peace with it. Make peace with it.
Yeah.
So that in essence, letting go is, if you want to invest, please go and invest.
Yeah.
Invest it. So in essence, you are letting it go because it will bring returns. It will come back to you. Yeah. So the mentality of I'm not able to grow the money is about people who still have anxiety of money.
Okay.
Money is not the problem. The problem is our mindset. Just relax and plan with it. And then say that now I want to start putting this money aside. Put 500. Let me tell you. And I want to challenge everyone who is listening to this, and they can test it on their side. There is always some comfort and some peace that comes when you end a month. For those who are on payroll, those who are earning in salaries, or if those who are making that's income from anywhere. That a month ends and you're not in debt. And on top of it, you have some money kept aside. There is some peace that comes with it. There is some guarantee that, I can actually save.
Nowadays, they argue that hata Kenya iko na deni. Sasa mbona ni
No, that is a country.
A
country should have the debts because of the capital investments.
Yeah.
Even a business, I say that that is not bad. It's good. The only thing is what value are you? Where did you put it?
Okay.
Are you investing it? If you invested and you are in debt, you are okay. Do not even complain.
Yeah.
Yes. If you take a debt to invest and you are going to get value.
Yeah.
If you go for mortgage, for example, for a rental property somewhere, you are in debt.
Yeah.
And maybe it could be a huge debt, but you should not be worried because that is an investment.
Okay.
And yes, it might not materialize now, but with some time given, you're going to get returns.
Okay.
So Kenya has debts, but it is on capital investment.
Okay. Okay, I get your point.
Yes.
I always have double thoughts because so many of you people, you finance experts, advise us to downscale to save more money. For someone like me, that would throw me straight into, what do you call it? A comfort zone. All right? Because I'd be good. Downscale hapa na pesa itatosha, intasave nini.
Okay.
For me, I would prefer in being in a constant state of pressure where I can't downgrade. So what am I doing? I'm forced to look for alternative ways to earn more income to sustain my standards. What do you have to say about that?
A good perspective, but I would also challenge you a bit.
Yeah.
Now, what if, despite the pressure, you are not able to keep up? What happens?
My die.
Yes, you thrive well under pressure, and it keeps you going. Right? Now, in that case, what is motivating you? What is the motivating factor?
The pressure.
The pressure. The pressure for what?
The pressure to just make sure.
The pressure to survive, right?
Yeah, to survive.
Okay, now. Now, the motivating factor is pressure to survive. You are just surviving on the edge. So you have to keep pushing.
No sleeping, because you sleep.
You get that?
You're dead.
Now, I talked about emergency fund. Eventualities come. What if you are not able to keep up with the pressure?
Now that's
because of one reason or the other.
Now that's a problem.
What happens? There is no guarantee that you will keep pressure and you will always get the flow. There is no guarantee. What if the gig is not there?
You're dead.
Yes, you thrive with pressure, it's okay. But then it is pressure to survive. Now, the motivating factor for someone who wants to build wealth is the urge for financial sustainability, to have to grow your net worth. Now, that is the motivating factor. So, this thing you're talking about, downgrading, is not literally downgrading. We are not saying that you need to suffer to save. No. We're just saying, bring your mindset to the realities. It's the same as someone who is earning 100,000 and wants to go and take a V8 on a loan. You get? It is not that this person could not get any other car between a bicycle to a V8. No, this person,
he chose.
Yes, he just chose to go for a V8. Where you are required to remit 75,000 every month. You get that? Now, this person is remitting 75 and remaining with 25K. This person, for the sake of the comfort of the V8, at what cost? You get that?
Even the 25, we use it to fuel it.
Exactly. So, what I was saying is, it is not about you bringing yourself to suffer. No. There is always a balance. Bring yourself to the reality. Tell yourself that, okay, I need a car. It doesn't have to be a V8. You have a lot of options. Take something that you can comfortably survive with. And also being in reality on what happens around. Yes. That's why a lot of estates, people have vehicles, but these vehicles only move out on a weekend. Why? This person does not have insurance. This person cannot afford fuel. This is a fuel guzzler. Someone is staying in Nairobi but uses public means to come home to Western or to Kisumu. Why do you think so? This person, the vehicle has it has not broken down.
It's in perfect shape.
Perfect shape. The only problem is, this person is telling you, my insurance expired. I've not gotten money to do what?
To renew.
Now, are you really in the reality? You cannot keep up with this lifestyle. That is what we are talking about. Maybe the vehicle will need to consume 15,000 worth of fuel from Nairobi to Kisumu. When you go back, another 15. Yes? Now, if you look at that expense, you are trying to do the math and you are like, no, I don't have that 20,000 or 30,000 now. So what do? Let me jump onto public means and I go home. Now, you are not being in reality. That vehicle is left for somebody else, not you. I mean, you are trying to hang on to something that you cannot sustain.
If you say that, I think that would wipe away almost 90% of everyone.
So that is
because that would mean so many of us are living in apartments we can't afford.
Do you know what brings about it? The problem nowadays, we have a lot of social media pressure. We want to keep up with societal expectations. We want to keep up with friends. We want to be seen, the fear of, being left out. The fear of being left out. You want to be part of the group, part of the people. That is the problem that we suffer from, especially the current youth. So what I would tell people is that there is a lot of noise in social media. There is a lot of noise out there. Try to take a step back and breathe deep and reset to the reality. Once you set to the reality and think about yourself, we could be age mates, we could be, peers, but whatever your source of income is not the same as mine. if I see you tomorrow living in a very high-end, maybe a very nice apartment, maybe you can afford. That is your reality. My reality is different. So I will not struggling to keep up with that so that I be part of that group. Maybe you have your buddies in the same apartment. And normally we meet somewhere and I feel like I'm left out. I feel like, hey, those people are on their own because of just where you live. So if I struggle to push myself to be included, to be part of the group, I'm now suffering because I'm not looking at the realities. How you be able to manage that is different from my sources and my capacity. So people just need to connect. So that is a problem, keeping up with what you cannot really maintain. So people just need to connect and be yourself, be the reality. And that's why nowadays there are a lot of WhatsApp groups. In a minute, someone maybe has a sickness, WhatsApp group, because this person has no money. And it will be very sad if someone is in a very expensive apartment. This person maybe gets sick for just 1 month, and everything is gone. You sell everything in the house. Why? You didn't have any saving for emergencies. And if you look at what you are spending a lot. You get. So that is a reality that people need to live with. Make sure you connect with the reality. Do not be under any pressure. Under any pressure. Yes.
Okay. That is an interesting perspective. I'd want us to brush through two main areas where there is also a bit of a problem. And I want to start with tax because I believe it's a little complex. But we'll just brush through it. Maybe next time we'll get time to go in deep. But for today, because this tax area affects both individuals and I want to assume the big corporates have their things figured out. So I'm talking about individuals and SMEs. Where do most SMEs get it wrong? Why do most of them fall in trouble with the taxman?
Okay, the problem that small business people have with tax is non-compliance. This non-compliance is brought about by ignorance, and some of them also do not know. And that not knowing is the ignorance part of it.
It rolls back to it,
So one problem I had mentioned is failure to keep their books. Most of these business people, and in fact, myself and professionals in the field like myself, my colleagues, when we get to meet these business people and you try to tell somebody about taxes, these people seem not interested. Until the taxman catches up with them, they are served with a demand letter. Is when they wake up that actually I need to make this thing work. Personally, I've handled a lot of those cases where someone tells you, I've been served with this letter. They've come and done an estimate from my bank statements, and from my M-Pesa transactions. Because remember, most of these people are they registered a business, not a company. So it is not a separate legal entity. It is a business.
So business, they will look at you also.
It is your personal PIN.
Okay.
That's why we normally recommend that there are those strategies, the tax planning strategies you need to employ. One, make sure you look at the bigger picture. If you can, register a limited company. A limited company has some advantages because this is a separate legal entity. Yes, you're the director, it's okay. But there are those, rules and implications that now will end with it. For them to move from a limited company to come to your personal, then now that requires another step. So most of these small business people, when you talk to them about taxes, they're very reluctant. They don't keep their books. They don't file taxes. Most of them file nil returns. And that's why the taxman has thought wise to bring e-teams. That is in fact, that is one of the targets of e-teams. So that they can be able to trace these people who are trading. And that's why e-citizen is also there. So when you go, you're a small business person, right? Now you go to a wholesaler, maybe you are running some small wines and spirits within the estates. And you think that I'm very small. I don't need to worry about taxes. It's okay. Where do you go to buy your stock? So you will go
distributor.
You go to the distributor, right? Now you go to the distributor, they'll want your PIN because they also have to follow the law.
They have to follow.
They have to follow the law. They have to file returns. They have to, and for them, they have to be compliant because the cost of non-compliances will be so high on them.
Yeah.
So they have to comply. Now, that pressure being put to them, they also have to bring it to you. You might not see it. You might assume. But for them, they will just ask you for your pins. You will give them. They will ask you, where is your shop? My shop is somewhere within this estate. So these are the prices you normally sell. Okay, so now we will treat you, we'll give you the wholesale price. Because you are going to sell now to the consumers. So we want you to bring us these details. We want to open your profile in our system. Right? Now, you rush very fast. If you don't have a pin, you rush to the nearby cyber.
Get one very quickly.
You go talk to them. You do not think, you don't ask yourself, what is the implication of this pin? Now for them, they'll be feeding into their system. They are selling to you.
Sell to you,
Yes. Now with the items, it will capture that pin. Now at the end of the year, you go to the same cyber person and tell this cyber person, file for me nil returns. They'll say it's okay. Now they check your bank. When you open in this bank, you use the same pin. When you're registering for M-Pesa, this is your line, you use the same pin, right? All that information is connected.
They have it.
That is the essence of technology, big data. So they will be able to see. They will be able to trace it all along and say, this bank is receiving a lot of money. And you are saying that you are filing little returns. Okay. One day you'll get them knocking on that your small shop. You see that your small shop, you normally see a small. They'll be knocking. They have information. And by the time they reach knocking, a problem, damage has already happened. They will ask you, are you this and this person? Yes. They have information. You are the owner of this shop? Yes. Now, we are people from KRA. You will start
panicking.
Sweating. Panicking. Now at that point, they've already, you've made them to go and look for you now. And when they look for you, the damage will be high. That's why we normally say, there are provisions in the law for you to manage your taxes and reduce the burden of tax. There is tax evasion and tax avoidance. Tax evasion is deliberate, deliberately not wanting to pay tax. But tax avoidance is taking advantage of the loopholes provided by the law to reduce your liability. On personal basis, that's why we have, for example, this mortgage interests. We have personal pension schemes. Whatever you remit to your personal pension scheme, that money is tax allowable. When they're calculating your tax, it will reduce the burden.
Is that why they say, because there's this common saying that the rich are taxed more while the wealthy find ways to avoid?
Exactly. Exactly. That's why those business people normally advise them, please run your business legitimately, register a company. And you will have some tax advantages. Now, I want to give an example of that shop, someone running a shop, for example, that maybe wants a speed or something. I'm just giving it as an example. This person has employed some 2 people there who are running the business, right? Some cleaner there, somebody doing ABCD, errand boy here and there. Put those people in your payroll of that your shop and declare this amount that you pay them as salaries or wages. You will claim them as expenses at the end of the year. They will reduce your tax. Those are provisions provided by the law, but people ignore. People just think that a tax is a burden, I don't want them. They will catch up with you and you will pay more. And they can even end up closing your shop. And you will find yourself in the court trying to defend yourself, of which you want to defend yourself. You know why? They will pull your M-Pesa statement because this is a personal business. They'll pull your bank statement and ask you, prove to us that this is not an income you made from business.
So now,
when tell me, even yourself, if someone tells you that, assuming you have a business, someone just pulls and then asks you, is this you? Yes, we got this, we pulled this from Safaricom. Now, prove to us that all these inflows are not from your business. What will you do?
That is a very tricky affair.
You want to get out of it.
That is a very tricky affair. So when then because there was this discussion online the other day, and someone was really discouraging people from, registering a company, at least until, she said, this is what she said, do not register a company, at least until you know exactly what you're doing. Before that, she said, just register your business and proceed with that.
No. Let me tell you. even those of us who are providing professional services, remember a professional service is an individual liability. Like myself, if I come and sign your books as an auditor, that is an individual liability. My PIN, my personal PIN has to appear there. But it is good practice that I should handle those items, even as I put my personal PIN, but I should operate under an umbrella of a company, an audit firm. You understand?
Yes.
I have to operate under an umbrella of a company, which is an audit firm. And this audit firm should be attached to a limited company, a limited liability company. Yes, it is individual liability. That's why my personal PIN has to appear. But this umbrella is important because it is a separate legal entity. Now, for that person who was giving that advice, I don't know the reasons that maybe she was talking about, but from my standpoint, if you're a business person, because remember, you aspire to grow. We are in the era of big data and technology. I tell you, even now, if you log into eCitizen, you will be surprised that all your information has already been brought together. You will be surprised. You see, let me tell you, as we speak now here, right now, do you know an analyst at the back end of Safaricom systems can tell everything about you from wherever they are. They know what you like buying. They know the shops you visit. They know the kind of products you consume. They can describe you from your top to bottom, and you don't know. They will tell you that this person likes to drink in this shop. This person buys a lot of food here because that history is there. So in that era of technology, if you tie yourself with a business like this, and they come with a demand letter where they are coming now to narrow down and ask you why you are not complying, they have the right to treat all incomes coming into your account as business. From business. Unless you prove. And how will you prove? You need to provide legal accounts that are audited. But these business people, they don't have that. So you can't prove. You'll say that because even yourself, if you pull your M-Pesa statement from last year, can you tell why somebody sent you money?
You can't.
You can't tell.
You can't tell which one came from where.
No.
What was this person?
You cannot remember. So they will catch you there and they will say, now, because you cannot prove, we will take an average. If you received, if your account of M-Pesa received $1 million, we will assume 80% or 70% of these monies as income from business. What will you do? But again, another thing, if you say it is not from business, where is it from?
Tell us.
Proof.
And why are you not paying tax on
it? Are you earning income to this tune? Tell us. So I tell you, technology is a blessing in disguise. And in this era, that's why eTeams is there. And eTeams, most people have not taken it serious, especially small business people. I've talked to most of these small business people, and it was interesting. There was one I talked to, then did not buy the idea, and I just left. Later, when KRA came knocking, this person was now looking for me, telling me, now these people want me to provide accounts, and they don't have anything. Nothing at all. Now, my plea to business people. It will save you big time if you try to keep your books in order.
You see, now, the reason why some people still assume that for a long time, let me tell you a layman's thinking. I've thought like that before too. And we'd say, hii biashara ndo nimeianzisha, bado sipati income, sitaki kusumbuana na KRA saa hizi, mambo ya vitabu saa hizi, acha igrow kidogo kwanza, and then I'll take care of the legal nini later. I'll register it later and take maybe its PIN later on.
No, it's okay. That is understandable. You know, even a child when born do not just wake up and start running. It takes time. There are stages. We are not saying you must start with a limited company. Not at all. Register your business, but make sure you keep your books for that business. Whenever you reach a point where you need to prove the operations of a business, you have something to present. So just run the business when it is still taking off. But once it is already running, that's why I was giving example of, for example, someone who has been running a wines and spirits shop. These are business that is already taken off. Now, this person, if you are looking at growth prospects, you need to consider now making it a separate entity. But before then, even if you're operating under your name, under your PIN, just make sure your books are in order. Should you come to a point where you need, for example, let me ask you, if you're running a small business and need to go for a loan, they will ask you for statements. They will ask you for accounts. If you do not keep those accounts, will you fabricate the accounts?
That won't work.
And if you want a good amount of loan, for example, you want to expand your business, you need good money, right? And you have to prove to them that your business has been profitable. If you've not kept anything all along, you don't have anything to present. Or you've gotten a partner, for example. Maybe whatever business you're running, you get someone who's interested and telling you, I think what you're doing is very nice. I like it. Are we able to team up so that you make it better and grow it? But I want to know how you are performing for now first. So that you can have a bargaining. You sit down and bargain and say, your business has been doing like this. Mine is doing like this. So how do we agree? Because you have to share the proceeds, right? Now, if you've not been keeping anything, do you think you'll have anything to talk about? It will simply be oral. You'll just be saying orally, but orally has no proof. So that's why we normally tell, as much as it is still your personal PIN, your business name that you registered, just try to keep your books. Keeping your book is not expensive. Just outsource professionals like ourselves. Outsource somebody to do your books. Keep the books and make sure that your returns are kept. Your returns are kept because one day it is going to save you big time. I've also had cases of people, for example, small business people who want to win tenders. There is a very lucrative tender that has come up, especially in these small women groups. They say that there is this group, they are doing this business. The tender has come up. Now, these tenders, you have to provide your accounts and statements. Now, when you get there, what do you provide? The tender is there, but for you to win it, you have to provide documentation. So documentation is very key. And that is the greatest undoing of many small business people. They assume it.
So when exactly in my small business do I need you guys?
Now, there is a perception that we are expensive. We are not. We are not, especially for outsourcing services. We are not expensive at all. Because, I mean, tell me, someone who is running a shop, maybe some restaurant or something, don't you think this person can part with 3,000 to pay a professional to come and make sure that the books are well kept, the returns are well done, and because again, some of them even find themselves in cases where they don't have even policy with their employees. They don't have any HR policies. An employee will go shouting and will sue them that I was employed, doesn't want to pay me. When you go to court, you will be asked, you are the employer, you know this person? Yes. Bring us the file of this your employee.
You don't have it.
You say, I don't have. Where is the agreement?
Don't have.
Now, you are mistreating somebody, you are using somebody without any legal documentation. So most of those people, they feel that professionals are expensive. We are not. Outsourced services are very cheap. And that is the way to go in the current society. You don't have to
employ
a small restaurant, don't have to bring a full accountant. You won't be able to pay. Right? Maybe even the amount of work required, there is not that much to require the full-time presence of this person. Just go and outsource. Just pay something little. You cannot fail to maybe afford paying like 3,000 in a month, and you know very well that you are shielded and all your books are well kept. Whenever KRA people knock, you don't even have to worry. You just call this person and say, please deal with those your people. And you tell them, Mimi, I don't know anything about that, but I have a professional handling that. You will get a smooth ride and concentrate on the main things. You won't have a headache. And that's why you see some of these people, they close their shops when they know those people are coming. Yes? Maybe.
Tax avoidance, literally.
They told you that they will be visiting. But now, because you know they'll be visiting, you've closed because you can't answer. You get that. You have a headache. So the most important thing, let these things be handled by people who understand, so that whenever things reach there, let them go and present your books and you will be okay. Because when penalties come, penalties will be way more than what you could have paid them.
Absolutely.
You'll go there and be charged a fine of 200K when you could simply pay 3,000 per month. And that is 3,000 by 12, 36,000.
You save more.
Yes. And again, the damage of, time and the headache that comes with it, those interruptions, you lose at the end of the day. So that perception is very wrong. Engaging professionals is not expensive.
Okay.
You just agree because it is not cast on stone.
Uh-huh.
Get one professional.
Yeah.
Talk to this person. Tell this person the reality on how you operate.
Uh-huh.
Let this person take care of your books the way it should be done.
Yeah.
When you need to secure financing,
Yeah.
a loan or something,
Uh-huh.
you have your books in order. You can present and you'll secure the loan. It has helped you.
Yeah.
When you have a problem with tax,
Uh-huh.
you'll not have, in fact, you'll not have a problem. But whenever someone asks, you are safe.
You are ready.
Yeah, so it will really save you big time.
Okay. Yeah. Sawa. There is still a lot to learn, but because of time, I really want us to end it there because of time.
Yeah.
But there is still a lot. There is a lot on taxes. There's a lot on money beliefs. There's just a lot we've not covered. So I'd want to ask you maybe next time, urudi tena manze tuongee. But I've had very interesting perspectives about debts, about taxes, about income, about investment. Yes. And it's going to shape my thinking going forward. Thank you so much for coming. We've learned a lot from you. Maybe as we finish off, maybe you tell them where to get you and what services you'll help them with and all.
Okay, I'm CPA Samuel Otieno. I'm an accountant. I'm a tax expert. I'm a finance professional. I also teach those people who are also studying to be accountants, specifically business data analytics, because we are in the world of technology. So advanced Excel and things like that. Those who are doing the course really can relate to that. So my social handles, CPA Samuel Otieno. You can maybe check on some of my communications and videos on YouTube. On Facebook, you can also get me at CPA Samuel Otieno. I have 2 handles on Facebook. You can get me Samuel Otieno, and also another one is CPA Samuel Otieno. And in case maybe you need more information through this channel, you can always reach out and they will always get to me. And, we'll be able to give you the guidance that you need. Yeah, so I think in case there is an inquiry about someone who wants to understand more about how they can go about their taxes, issues of financial discipline, tax management, tax planning, and all that, I think through your channel, because that's where they should be able to get this through, then, I'll be glad to come in and, assist.
Thank you so much, Sam. Thank you so much for coming. We've learned a lot. And we're looking forward to have you again. Urudi tena na tena tuongee mengi zaidi.
My pleasure. Also, thank you for having me and I've enjoyed the session.
Asante sana. You like, subscribe, follow him too on his handles, Samuel Otieno, CPA Samuel Otieno. Those are his handles. Kila mahali.
Yes.
See you in the next.